Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Wednesday, September 17, 2014. Today we had our all-important, much-awaited Fed meeting. And all in all, it was much about nothing as it usually is, but nevertheless, the market whipped around just like we laid it out last night. And let's look at an intraday chart and just kind of review what happened, and then I've got some thoughts about what's next. So here, the Fed makes their announcement over here. The market goes down, it goes up, it goes down, then it goes up, then it goes down. And I said yesterday, the first move is always the wrong move, and I don't even remember which way it moved first. I think it was up into the meeting, then it went down, then it went back up, then it went down. So I guess all moves were wrong. Any way you look at it, market finished basically flat. The S&P was up 2.5 points. Dow was up 25. NASDAQ Composite was up just short of 10, 9.5 points. So, but it was a wildly volatile day, and it was also interesting because we went up, we made a new high in the SPY, okay, and then we pulled back off that high. Let's look at here. So we made a new high, pulled back off the high. Now this could be a topping tail, although I don't think it is. Could be a spinning top. There's all kinds of names for this stuff. But what this could be, if this was higher, like if this was up here and it would look like the same type of candle, I would say that's more indicative of a topping tail. But, you know, we pierced the high by a couple of pennies and then pulled back down. I don't know how much you can make out of that. But nevertheless, Fed Day's behind us. All right. And they had their press conference. And by the way, I don't listen to this stuff. I don't care what they say. Just let the charts tell me what to do. I'm assuming they said nothing. They had their phony press conference after at 2:30. I don't know, what did it last? Maybe a half hour, 45 minutes, something like that. And it was just a bunch of nonsensical questions and no answers. So, and I didn't watch it. I'm just saying that's what I'll bet it was. Anyway, so, you know, what do we have? We have the finishing up of options expiration, and I will tell you that there's a ton of rebalancing that's going to go on tomorrow. It's going to probably be another whippy day, and you also have the referendum from Scotland breaking away from the UK. Now, I don't know exactly what time we'll know whether that succeeded or failed as a referendum, but I can say that if they're succeeding, I can tell you the currencies are going to go wild. And if the currencies go wild, I think the markets will go wild after that. So it's kind of it's like a parallel fashion. So the referendum is announced, currencies may move, and if currencies move, all markets move. So we'll see what happens. I don't know what time, like I said, but my guess is that it would probably be sometime in the mid to latter part of the afternoon if we're going to know tomorrow during the market hours either way. So we'll see what happens. And then you have finishing up of options expiration and the Alibaba IPO. So all these things are still in play this week. And I would say that, you know, we're still pretty good idea that we're in the eye of a turn period. So like the eye of a storm, it's like the eye of a turn period. You know, we kind of started to turn around the beginning of September. We chopped around, we went down a little bit, back up, and we're still in that window for a turn. Now, turns can be inverted and the market can go higher. Now, make no mistake about it. This, let's go over to a weekly chart, okay? Let's make no mistake about it. This is why short plays up here are very difficult, because this is a wildly bullish market. I mean, it's bullish till it's not. It's that simple. Now, I say we're in a turn, and my work tells me that we're going to pull back, and if we pull back below, you know, let's, in this area here, if we pull back below, let's say 194, okay, I think this was the low. 194 here, right here. 194. If we pull below 194 and close below there, then we'll probably see considerable more downside, probably to either this pivot low or this pivot low down here. Now, that's a long way off, and there's a lot to go on in between, and there'll be bounces along the way if it does happen. But nevertheless, we're still in a window where we should see 194 in the next couple of weeks. That's my take anyway. Now, if the market breaks out to the upside, obviously that's off the table. But for now, until further notice, until the market tells me something else is happening, that's where we are. All right, let's move on. And let's talk about gold, because gold was very weak today after the Fed announcement. That means that the gold market is perceiving the Fed as being somewhat hawkish, meaning that they see strength in the dollar, they see interest rates rising, and they see the price of gold coming under pressure. Now, I'm here to tell you that, and it's going to sound weird, I'm going to explain it in a minute. Gold has a 50-50 chance of really collapsing. Now, it's not like it sounds. I'm not saying it has a 50-50 chance of going up or down. That's nonsense. I'm saying that if we come below this low here on a weekly basis, I think that gold could have another $100, $150 on the downside. So right now, as we stand, I'm just looking at another platform here. I don't have gold on this platform. Oh, yes, I do. Well, it doesn't matter. Here, price of gold right now is $1,219. Okay, $1,219 in the aftermarket today. In the overnight or Globex session, it's got a low of $1,216. Now, I told you, I think last night, that gold was probably going to go down to $1,213 to $1,215. It looks like we're basically there now, another dollar or two, and that satisfies that target. But if we continue down, we can find gold at $1,150, we can find gold at $1,100, and we can find gold at $1,050. As crazy as that sounds, that is possible if we break down in gold. And I'm not sure that's not happening right now, so the jury's still out. So with that said, I'm going to leave it alone for now. There's no play in gold whatsoever until further notice. And let's move on to oil. So where are we in oil? We saw a bounce, couple days. Okay, this is the USO. Right now, the price of crude oil is 90. Well, where are we? We're at the November contract, 92.79. Okay. The future contract, the December contract, is at 92.12. So what that means is that the futures market is saying that the price of crude oil in December is less expensive to buy than the near-term contract. That means that doesn't only mean, or that doesn't mean just that alone, that the price is going down, but it's one of the factors. And I'm telling you, the price is going down in crude oil. We may bounce further up, and we may test this 200-period moving average here, maybe even higher in the price of USO, and same chart looks for crude oil. But I'm here to tell you that this is going lower, and the price of crude is going, in my book, down to $85 a barrel. And I can't tell you exactly when, but once it starts down, that's where it's headed, and that's my take in crude oil. What else do we have on the docket? We have GDX. We talk about GDX a lot because we had that inverse head and shoulder. This is a weekly chart again. Inverse head and shoulder is obviously off the table. This is breaking down. Now you don't even want this thing until it breaks this pivot here, or maybe even tests this area here at probably somewhere in between is where it'll stop, if it's going to stop at all. You'll get a bounce along the way, but you don't want this thing either. So suspect in gold, suspect in oil, suspect in the market. We're at an inflection point, folks, and that's why you have to be very, very careful. I haven't put out a ton of trades to the members, and I know some of them are getting itchy because they want to play the market, but I only put out trades when I have like an 80% probability in my mind of being right. In fact, every time I take a trade, I expect it to work out. But I'm not taking a trade that looks like a guess or a gamble because the market's whipping around and we had the Fed week and options expiration and we have Alibaba and we have a turn window in the market. So all that stuff is conflicting. And, well, what do you know? We haven't really gone anywhere over the last several weeks. We've gone up and down, but the reality is we have no direction right now in the market, no clear defined trend. And until we have a clear defined trend, you want to keep your hands in your pockets because sometimes no trade is the right trade. All right, so with that said, folks, I think I'm going to leave it there tonight. I'm David Frost, mystrategicforecast.com. This was another episode of Common Sense Market Analysis. Thanks for tuning in, folks.